Hello guys, and welcome to another video. So in this video we're gonna let me just add this. We're gonna do what? We're gonna how to determine daily bias. How to determine your daily bias. This is what today's video is gonna be all about. So there's actually two ways I like to do it. Oh, let me not say two ways. The only way I determine my daily bias and is on the high time frame. It's actually on the high time frame. I do it either on the weekly or on a daily. And then I will confirm my daily bias on the lower time frame. I will show you how I do it right here. So I'm using the DXY because its price action when it comes to things like that is pretty awesome. It delivers nicely. As you can see right here, we have delivered quite well when attacking that sell side liquidity right there. And then we have buy side resting up there. But I'm not saying it is my target. As you can see, it's currently collapsing because everything is moving to the BRICS pay method or whatever it is. So the dollar is gonna crash, my guy. This is also fundamentally affected, but I'm gonna show you how it can be caught using only price action. People will say it's impossible because they want to sell their stuff, but today I'm going to show you that it's possible to catch these moves. And when I say these moves, I'm not saying NFP kind of moves. I'm talking about these kind of moves. Not one short move happening in split seconds. So starting off on the weekly time frame, you want to see where you are. So let's say we are here. Ignore all of this down movement. Let's say we are opening here, and then let me just do this. I'm gonna go a reline. So it opened here. Né? We have a fair value gap right here, and then we have sell side right here. It's important to know how to read the chart when you want to determine your daily bias. Easy. If you don't know how to read a chart, it's going to be very hard for you because the daily bias is something advanced, my guy. So when we tap into the weekly time frame, already your daily bias must be bullish. You must expect bullish candlesticks from that bullish fair value gap. This is a bullish fair value gap. You must expect bullish prices. So how many days are here? There are 5 days in here, 5 days in here, 5 days in here. So for 15 days straight, you were bullish until price decided to break down below. So it's actually somewhat 10 days, or let me say 12, because there are days that we were up. But let's go. We're gonna start with this candlestick right here. So we're gonna go to the 4-hour time frame, and then we're gonna look at the weekly open. If you watch my first video, actually, you'll see that this is actually what I was doing in the first video. So we're gonna go to the open of that week that I was highlighting on the weekly time frame. So Friday, Sunday, this is the open. So what you want to see, remember your higher time frame analysis. We are close to a weekly time frame. So when price taps into that weekly time frame, remember this does not exist yet. It's going to exist when price closes this week that we're busy with. So price taps in there. When price taps in there, it's going to be, so let's say it's Monday. You're waiting right now. You don't have anything. You are actually waiting for price to tap the weekly fair value gap. So it's Tuesday, Wednesday midnight, price taps into that. So you wake up, we are here. Already you are bullish. Why are we bullish? Because price has tapped into a weekly bullish fair value gap. That's how you must get your daily bias. We tapped into a weekly fair value gap that is bullish. So I'm gonna be bullish every single day until I get a sign, a signal from the market that we are going down. So how do I confirm my daily bias? I'm gonna move on to the 1 hour time frame. So just zoom out a bit, and then we're gonna go to Wednesday. Time comes first in the market, always. So firstly, what do? We get midnight open. Here's midnight open. When we open at midnight, you want to see where is price going first. Is it going to the downside? Is it going to the upside first? So this is Wednesday's midnight open. We open here, collapse. We're collapsing immediately. We do not go to the upside. We do not consolidate. We just go down. So price must deliver to both sides of the market, meaning we must deliver to buy side and also sell side. That's why the market won't just go to a level just like that. It moves in ranges. It goes up and down. So we open, we go down. Immediately, when you see that, you must look for buying opportunities. Here's a buying opportunity right there. This is a fair value gap. You enter when we tap into the fair value gap, you buy, you hold for buy side, take profit hit, 100 pips plus the gain. Let's go to Thursday. This is Thursday's midnight open. So we open here. Where do we go first? To the downside. After going to the downside, do we take out sell side liquidity? No. Do we trust that we're gonna shoot up? No. Why? We did not take out sell side. We did not deliver to the downside. But we opened, went down. You are still bullish. Why are we bullish? Buy side liquidity. So you gotta read the market. It's gonna give you signs. It's gonna tell you that, hey, we are going up to the upside. We're going to the downside. This is how I confirm my daily bias. When I'm on the higher time frame, price is gonna like tell me that, okay, we're tapping into a weekly fair value gap or a daily fair value gap. When we tap into a daily fair value gap, let's say this one, for instance, we are tapping into a weekly bullish fair value gap. I want to see, if you want to see price tap into that weekly bullish fair value gap and react to the upside, you want to see days like these when we open and go one direction. When we simply open, go one direction after midnight, that's when you know that, okay, after this day, we're going to go to the upside because we manipulated into the downside. without delivering to the buy side. This is actually ICT power of 3. We open, we accumulate, manipulate to the downside, and then distribute. That's how price will do when time meets price. This is the low of the week also. That example is very far. So this is also a weekly fair value gap. So we have a bullish fair value gap, weekly fair value gap, and a bearish weekly fair value gap. So we're betting against one, but we do not know which one until we break out of one. So we see price have broken out of this one, so we saw it eventually, but we opened here. No, Friday. So Sunday's opening is here. Let me just Sunday's opening. This is Sunday's opening. So what do you want to see? You want to see price tap into this weekly fair value gap. Mind you, we come from a bullish one. So you want to see whether will price break out of this bearish one and disrespect it, or respect it and go to the downside. So we tap into that weekly fair value gap. So how do we tap into it? Do we have a day like this one where we open midnight and manipulate to the downside immediately, or what? Let's take our line. We're going to look for midnight. Here is it. Inside the weekly fair value gap, we open midnight. What do? Let me just do this so that you can see it actually. So there is midnight. I'm gonna make it dashed line. So we open. What do? We go up, come down at that midnight level, and then shoot up. Have we delivered sell side already? No. But what did we do? We actually took out buy side liquidity resting above here inside a weekly bearish fair value gap. You see, so already you know that when you expect that price will tap into this and go down. Why? Because it's a high time frame PDRA already. It is stronger than the lower time frame PDRAs. So you will not bet a 1 hour time frame analysis against a weekly time frame analysis. So when you have a weekly fair value gap, you expect price to touch into that fair value gap and then go the other direction. So already you're expecting price to go down from this. But before price goes down, you want to see something like this. Even from this bullish one, we saw something like this happen where we open, go one direction. That is pretty obvious. You see, we opened here, went downwards. That was obvious. It didn't try to trick you into going to first going to the upside and then going to the downside and then coming back into the range, consolidating. That will happen in days where we do not tap into a fair value gap. You get me? So here we open, go up, come back, touch that midnight open line. Also finish them, those early sellers right here. We took out buy side liquidity right there. Then you wanna look for selling opportunities. Why? Because we took out buy side liquidity in a bearish weekly fair value gap, and then the daily open, the midnight open, has showed one direction. We only went to the upside. We did not go to the downside and then upside and then consolidate right there. You see, that is how you confirm your daily bias. So on, let's say, on your day, sometimes you can use the daily time frame as an as a thing, you do not need you do not use weekly fair value gaps only for like direction. Even the daily fair value gaps can be as much as important as the weekly fair value gaps are. So I'm gonna delete this. I hope you got, let me just leave it. So we tapped into that fair value gap. You sold right somewhere around here. You take profit, let's say it's here, you hear it, and then we break out. So when we break out of a fair value gap and close outside of it, your mind must tell you that, okay, that fair value gap was faded. We did not respect it. So here you see that we respected this one. So price is bearish. That's a signal already. Price is bearish. So what are we going to do? We're going to take out sell side right here. So you must look for selling opportunities. After taking out selling opportunities, you must wait. That's when patience come into place in trading. You must wait. We took out this low. What do we do next? Doesn't mean we're going to take out this low and run up and take out buy side. No, you want to wait. Remember, we have a weekly fair value gap that we disrespected. Is it possible that price will come back to that weekly fair value gap and push further down? Yes, it is possible, and we see it happening right over here. I'm going to go to the 1 hour time frame, and I'm going to look for the weekly open. This touch is very important. This breaker I told you all about to look at it out for, but I was also looking at buy side liquidity, these highs right here. But let's look at this. What is the weekly, the high time frame suggesting? The high time frame suggests that we're gonna take out sell side liquidity. So you stick to that every time you go into the market. You stick to it every time. When you're on the 1 hour time frame, you must tell yourself, we're going to sell side. We're going to take out sell side. You don't want to buy. So here you're gonna look for the weekly open, and then we took out sell side right around here. So that's when you're waiting for price to see what it's gonna do. So here I think this is a daily fair value gap. So it falls short of the daily fair value gap, but returns away into the weekly fair value gap that we faded. So this weekly fair value gap is actually an inverse weekly fair value gap. It was bullish, now it's bearish. It's like something like this. So this is you. What's happening here right now? Yeah, wait. I'm very tired. You have been sitting like this for long. So let's say you are jumping. You're jumping. And then you suddenly go below. You try to jump back, but you're failing. That's something like this. That is what's happening right here. We were using this as a factor to go up, but right now we broke below. We're using it as a factor to go down. So once we touch there, and then you see an rejection, remember, what kind of days are we looking for before an expansion to where we want to see price? We're looking for midnight open, 12 o'clock. Look at the time. This is midnight open. So relatively, we have midnight open, 1, 2, 3, 2 candles to the downside, and then shot up to take out buy side. When we take out buy side, what do we tap into? we tap into the weekly fair value gap. You want to be a seller there, but it's very hard to sell that. So let's say you wait, and then price will take its time. It took its time. Look at this. This is a breaker block. This is a breaker block. I sent this breaker block when price was right around here. No lie, here it was approaching it. That's when I sent a photo of it. So remember, what kind of days are we looking for? Remember, we're already bearish. What kind of days? Days where the open is like sudden to one direction. So we open, we don't move, we don't really move, but shoot up immediately. When we shoot up, we tap into a breaker block. Right there, you consider selling right there. Let's see how many opportunities are there on the 1 hour time frame. We create a high, come back into a breakup or below the breaker. This is a low, we take out the low. This is a fair value gap. You can be a seller on this candlestick. You sell there and then go down. This is a fair value gap. This is a fair value gap. Price comes back, fills both of those fair value gaps. That's a sell order. This is a order block. You can be a seller there, a seller here, and then those are fair value gaps. You see, like, the main thing you must focus on this video of what I say today is the kind of days you are looking for and where do those days form. So this day, how did it form? It was a day running into a breaker block. A breaker block to go away, to go to this, to take out sell side liquidity, resting here. Let's go back. You're looking for these kind of days. Where does this day form? In a weekly bearish fair value gap. You're going to look for sells immediately. These kind of days. This is supposed to be somewhere around here. These kind of days where we open, go down into a bullish fair value gap, and then you're going to be looking for buying opportunities right there. You buy and aim for your targets. Simple as that. And I hope that was very insightful and it will help you upon attacking your bias, your daily biases. So remember, you start off on the weekly time frame. For me personally, I use fair value gaps and old lows and highs, sell side liquidity and buy side liquidity only on the high. On the high time frame, I mainly focus on liquidity and fair value gaps. So if we have taken out liquidity and I see a midnight open, an immediate direction to the downside, and we just took out sell side liquidity, that's an indication that we are going to the upside, because that was a turtle soup and then we are forming a high probability day. A high probability day, you will see that market will open at midnight, go one direction easily. It will easily go to one direction. Not every day is like that, I promise you. I've seen it in my life. I saw many times the price open, go one direction for the rest of the day. It's possible. I swear I can find you one right now. It's not even a month old. I can even find you right here, somewhere around here. There is a day that opened and went straight to the downside without offering a fake move. So it's important to know where you're looking for that kind of movement. So we got our line. We're gonna look for midnight. Wait. Here's not far, not even far. We open, we sell, we sell, we sell. Do we come back to the open? No. We sell, we sell, we sell. So these days, it has its reasons. So it's not every day that you're gonna need a bias. There are days where the market is in a distribution phase. The market moves in 3 phases. Well, the market moves in 3 phases. First phase, no, accumulation is the first phase. Second phase, manipulation. Third phase, distribution. That's how the market moves. Accumulate, this is the accumulation phase. This is the manipulation phase. Into what? Always. The question you always need to ask yourself, into what? Where are we going? Where are we manipulating into? This is accumulation. This is the kind of day you're looking for. You want to see price open, move to one side, like one side. You want to see it buy into one side first, but you already have a bias. What's your bias? You already saw the weekly time frame you being used as a bearish factor. So once we use the weekly fair value gap as a bearish factor and you see a high probability bearish day like this, you're going to look for sells. So we don't just go. So if you're going to go in the market and look for days that move like this, so it means you're going to consider days like this as bullish without actually highlighting your higher time frame analysis correctly, without actually looking at the daily time frame. You have to look at them. They will tell you signs. They will tell you signs. Let me delete this break. I want to show you something real quick. So if I delete this, what is this? What is this candlestick's low and this? What is this? This is a fair value gap. I didn't even use it today. This is also my first time seeing it, but I knew price is bearish. This is a bearish fair value gap. Convince me otherwise. That is a bearish fair value gap. A daily even. So when price taps into a daily fair value gap like that, like this, like this, like this, like this, how? What? Why do you say like this? I say like this. You look at this. This line only can blur out many things. It can tell you many things. You want to many. You will ignore many YouTube videos just by this lesson only. I promise you. I can bet many. So when we open, go one side on into a high time frame PD array like this fair value gap. This is a daily fair value gap. It's not visible on the 1 hour time frame. Go back in the video, you'll see it. This is a daily fair value gap. So once price taps into that fair value gap, already you must be bearish. Why? Because it's a bearish fair value gap. It's a fair value gap that indicates to you that we are now selling. So what kind of a day are you looking to see? You're looking for a day that will open on midnight like this, New York time zone, UTC -4, New York time zone, always. So we must open on midnight, go one side. After going one side, you want to see your entry model. Whatever entry model you use, you don't just enter once let's say you enter here. Will you stand all that heat? If you wait, you will enter right there or right on this candlestick's high. It's still in the daily fair value gap. It's fine. Whatever your target will be, it will get hit. You see how beautiful it works? You just wait for the right day. it will form, and when it forms, it will pay you very much. I once sent a signal. Let me find it for you. I once sent a signal when I was still using Telegram, using all this logic I just told you all now. Let me just find the picture. I'll show you on my other phone. I'm using this one to record. This is not it. So look at this. You see below here, this is midnight open. You see here, I already entered. What is this? Daily. You see the word daily. You see the word 4-hour fair value gap. If you see, I do not have. Look at this. These are old. What is this? Midnight open. How did it do? It opened, went one side. What am I looking for? Selling opportunities. What are the results? These are the results. Selling. Hit me on break even, sell. Take profit, hit, just like that. Right time, the timing only takes you far. I want you to see the GBP USD analysis because it's exactly what I'm telling you here. Let me just find a better one. I don't have a better one. But you saw how I used it even with you guys. Open, go one direction. That when it opens and you are bearish and price opens at midnight and goes down, let's say you are bearish. Right now you want to see sell prices and it opens and it goes up. That's a good thing. That's a good sign for you that price is about to dump. Because that what you're witnessing is manipulation. You have a chance to enter on the manipulation and you know that it is manipulation because the high time frame already told you that we are bearish. No matter what, we are bearish. When you see a daily fair value gap, it automatically makes it bearish. When we tap into a daily fair value gap that is bullish, already you must expect bullish prices. I was gonna make an example on Nasdaq, but on Nasdaq I use a different approach, not the approach that I told you all about. Because if you see in the group chat, I'm scalping the hell out of this. But thank you for watching today's video. I hope it's insightful. If you can even see it's pretty long. I didn't want it to be this long, but hey, it is what it is. Good day, cheers.